Cool. And I'm gonna drop this in the dominant announcements as well. Hey, what's up, guys? You guys coming in here, just give me a second. I'm just dropping the link in the dominant announcements as well. I just dropped it in the general public. So let me just drop this in the dominant section as well. Give me 1 second. You guys are doing good today? Give me 1 second. Started.
Alejandro.
Yo. Can you guys hear? Is everything cool? I just dropped the link in the public. I guess you can say the general chat, and then I did it in a dominant chat. So as I told John here today, I know we're doing it at a different time, so we would expect a little bit less people, but that's fine because we're going to record it, and then we'll just get it going that way. So I'm just going to give a couple more minutes for you guys to come in. Can you let me know in the chat? Can you guys hear if there's anything weird going on before we get started? So we just don't have any issues. Sound very clear. Awesome. Cool. Yeah, so really quick, guys, what I just wanted to do with this call is, I mean, obviously this is John here from Balcony DAO. And as we go into, like, I don't know how you can say, like, a possibly longer term NFT bear market, we really don't know where things could go. But I just want to look at when we talk about this aspect of changing the world with NFTs, or this NFT underlining NFT technology to actually have the ability and the power to change the way that the world actually works in a fundamental way. When I was like doing research with this project, Balcony DAO, this seems to be one of these projects that has the potential to do that. And not only that, but just also, I want to talk about like other things deeper than just pure like NFTs and trading PVPs and monkey pictures and all this kind of stuff. So, you know, and these guys have been doing like real estate at like the highest level, and for like multiple different reasons. This is the reason why I wanted to like get these guys in here and just talk about, you know, what they got going on and real estate in general, whatever other questions that you guys have as well. So I'm gonna just let John introduce himself and like what the guys are doing, and then we can kind of take it from there.
Hey guys, how are you? I'm John Belitsky. I'm a co-founder at Balcony DAO. There are 4 of us founders: Dan Silverman, Alexander McGee, Mike Reichel, and myself. And we're all, as Donte said, real estate guys who love crypto, got into the crypto space years ago, and saw an opportunity to kind of merge these 2 worlds together and create real world asset-backed NFTs. So buying actual real estate as an actual NFT. And so, you know, I spoke with Donte a little bit because he had some interest in the project, and we kind of chopped it up a little bit about what real world utility looks like and what we're doing in the space. And he was nice enough to invite me on to kind of talk to all of you guys about it. So I'm very, very excited to be here. Very pleased that there's so much interest in what we're doing. It seems like lots of people, maybe it's because of the bear market that Donte was referring to, but a lot of people at the moment are very interested in how do you create real value with this technology, and how do you change our lived real world lives using NFTs? And that's precisely what we're doing. Real estate is a $326 trillion industry, right? So this is the largest market. It is the oldest asset class, and it is the last to adopt usually this type of technology. So what we're trying to do is accelerate this move to bring every piece of data, all the metadata, every single attribute of real estate onto the blockchain into an NFT. And the first question should be, you know, why an NFT? I think you guys, if you're in this space, you probably understand better than most. We want this in an NFT because every piece of real estate is unique and every NFT is unique. It's a non-fungible token, and real estate is a non-fungible asset. And so this is the perfect one-for-one pairing between digital assets and real world assets. The NFT is the digital doppelganger of real estate. And so we see this as the perfect tool to fractionalize ownership, to record ownership, to hold title, and to demonstrate provenance of assets. And I think I'm just going to pause right there for a sec just to make sure where I'm at so far, Donte, you and all of your community here understand what we're saying. And if you have any questions, I'd love to even start right here before I move further.
Yeah, do you guys have any questions? Any questions about like what he is? I guess one thing that you guys should talk about, and because just so people like know that you're not like some random guy, like people know like you guys are like very accomplished. If you want to like talk about that a little bit, because obviously ideas are great, but actually having the team to accomplish set ideas is the biggest thing. And I think that you guys really, you really have that experience in this kind of thing. If you guys want to talk about that, or if you want to talk about that, and also if you guys just have any questions in general, you can just like raise your hand or just type in the chat, and then we can answer them that way. So we'll do it like that.
Yeah. So the reason why I wanted to pause right there is exactly for that reason, Donte. I am a real estate professional. I've been licensed in New York City since 1999. My partners come from real estate families. Dan and Mike rather are cousins. Their grandfather owns the largest global hotel franchise business in the world. In the 80s, it was a publicly traded company. And Alex McGee, like me, was a broker for many years. He worked at Cushman & Wakefield. He also owns about 20 properties that he raised capital, purchased, and developed. And so we are all real estate pros through and through, and have been in this space and know the space very well. I myself have had a design build business, so I know how to build real estate. I own Abraham and Martin, which is a real estate investment banking firm, a commercial real estate brokerage firm, and we also do M&A work as well. So we've had kind of across the board experience. If you can, demolish it, build it, entitle it, sell it, lease it, lend against it, acquire it, do a JV with it. We've done every single aspect of this business in our career and have touched it and really know the space really well, which is, again, why I'm trying to kind of pause along the way as we go deeper and deeper into the real estate side of things, because if you're unfamiliar with the real estate space, it can start to get a little thick, a little dense as we move forward. So if anybody has any questions at any point, just raise your hand. We'll stop, we'll pull it back, and we'll break it down for you. So I'll keep moving forward. The next piece of this puzzle is, how do you take the largest asset class that is completely opaque, right? It's very difficult to get any information on any piece of real estate. How do you take all that information and move it on chain so that you can begin to purchase it, lend against it, sell it, trade it? How do you do that, right? And so in order to do that, we had to build our own RE NFT, we're calling it, which is our own protocol. I should also mention that I have a background in technology as well. My father was a computer programmer. I grew up around coding my entire life. And so that allowed me to kind of bring the technology aspect into this asset class. And the way that we've decided to do that is to create what's fundamentally like an API for Web3, right? So we create this protocol that has every piece of metadata about a property where you can upload it directly into the NFT and it sits on the blockchain, which is incredibly important, because if you think about all the different attributes of real estate, you've got your address, you've got your location, you've got the size of the building, you've got the rent, you've got the tenants, you've got the tenants' names, you've got the electric, you've got property management. Every single thing you could think of about a piece of real estate has to go on chain. And the reason it has to go on chain is if any of you guys want to purchase one of these real estate NFTs, you want to know what you're buying. And it's critical that that information be immediately available, documented on chain, not off chain, and immutable. So things can change through time, but the documentation of those things cannot. You need to be able to know that at any given point when you're looking at one of these assets, the data that you have is proven data that is high quality, accurate, up to date, and that allows anybody anywhere in the world to buy a piece of property. You no longer have to, fly into the market, do extensive due diligence. You can look at all the data on chain. That's enormous because that means that we're creating a much more liquid market by virtue of the fact that we're increasing the number of people that can have an interest in purchasing these assets. So the next piece of that is once we have all this data on chain, we make our acquisitions, but we also create a marketplace, right? And our marketplace will allow anybody to buy and sell these properties with alacrity, right? So think of like the New York Stock Exchange for real estate. That will live on Balcony DAO's website and it will contain not just all of our assets, but the assets of any sponsor, any owner, any developer who would like to bring their properties into the real estate NFT protocol and allow them to be bought and sold within Balcony DAO. The DAO, I think, is the next piece that we should probably discuss, which is also very interesting. Because we're in a regulated space, because real estate's regulated, and we believe that what we're selling are also securities, we can't just abdicate control of the DAO. We can't just have every single person who's a member of the DAO make decisions that could, frankly, land us in jail and leave all of us as the founders with an enormous vicarious liability. So the focus of our DAO is a little bit different than most DAOs. Our DAO is a group of professionals from all across the world in real estate and in crypto. These professionals who will purchase the Balcony Asset Club token are able to source transactions. They're able to act as an investment committee for those transactions, make recommendations. They're able to put forward, for example, property managers. If one of you were a property manager and you wanted to manage one of these properties, you could submit your proposal to a Balcony improvement proposal, a BIP, just like in other DAOs. It would then get filtered to our Balcony Assets Club members who act as an investment committee and oversight, would bring that up for vote, and you could be voted into the property management role inside of this asset. Or if you're a broker, you could bring a piece of property that you represent and you could say, look, this is a great transaction. It yields, 8%. We think it's a go. We'd like Balcony to buy it, right? So you could still earn your same brokerage fee that you would get in the carbon-based real world, but you're bringing that into this transaction and you can participate in it on a fractionalized way instead of just trading it, and by bringing it to our investment committee for approval. So inside of that DAO structure, there's also sub DAOs, right? So each one of these assets that get bought. So if you bought 123 Main Street, for example, that can be its own sub DAO, 123 Main Street, where the DAO members who have that specific real estate NFT can then decide on what they want to do with that asset or vote on initiatives with that asset, whether that be a capital improvement program, changing the roof, which roof do you choose, whether that be a repositioning of the asset, whether that be accepting a tenant's application or not for perhaps a commercial lease. Do you want a 7-Eleven here or a Starbucks? These are things that can get voted on and discussed inside of those sub DAOs. And that's kind of a general overview of the structure, right? We've got our DAO, which we've just explained. We have our real estate NFT, which is our technology that allows us to fractionalize ownership of this. We have our leveraging of the metadata to create liquidity, which will increase asset values in our view. And the last piece, I think, is how we're using DeFi, right? So, for example, we're building 31 units right now in Long Branch, New Jersey. That's a out-of-the-ground development in an opportunity zone. So there's actual real-life opportunity zone tax benefits available there, by the way. But from that opportunity zone, we're now going to build these residential units that are going to exist 18 months from now, right? When construction is completely finished. In the traditional real estate world, you go out, you purchase a piece of land, which we've done. You get entitled, which we've done. Then you go out and you get a construction loan so that you can build the construction component of it. At the expiry of the construction period, you would then put onto that permanent debt, right? So like a long-term mortgage. We're doing something very different. We're raising all of the money. So it's a $12 million terminal value on this one, small deal in Long Branch. So we're raising the entire terminal value at cash flow zero. From the second we raise that money, we place that money into USDT stablecoins, deposit it with Anchor, put an insurance policy on it, and net 16% on all of that capital. So you've reserved your position inside of the capital stack to buy this property by buying the real estate NFT. You've paid for the terminal value of it. That money is immediately made productive and put into stable coins that are insured, and we'll manage those stablecoin treasury pools. You're getting positive carry while we're developing the property. And every time we need a construction draw for the foundation or the windows or the roof or the toilet bowls and bathrooms or whatever, we just pull down from our own reserve of capital that we have deposited in stablecoins, make those payments, and continue to build what is the capital asset. And at the end of the construction period, we then put permanent financing on that property, take back 75% of the total value of that property, which is $9 million, places that back into stable coins. And now we have a positive carry on the mortgage as well. So in total, we end up with a much higher yielding real estate development than a standard real estate development. We're not paying the LP promote fees. We're not paying for construction during the development period. We're getting positive carry during the construction period. And then we're getting positive carry from the debt load that we're taking on from the traditional financing at the end of the development. This is far more profitable than a standard real estate deal using only traditional financing tools. And it's much more interesting. We also add on top of that, the actual JPEG, right? So the monkey pictures that Donte was talking about, they're fun. We don't have anything against them. In fact, this is one of ours. This is a balcony deed, which I'll get into in a little bit. Every one of our NFTs is also going to have artwork, and that artwork is going to be a collaboration between the individual property and marquee artists that we're going to reach out to and create a JV with. And so that creates another really interesting dynamic that's never existed in real estate, which is we understand what the real estate is worth, but it's very hard to peg down what the actual JPEG is worth. And we like this dynamic because we know that there's a concrete floor on what the real estate is worth, right? If we have a building that we built that's worth $12 million, if the market goes to hell in a handbasket, maybe you could say like, oh, it's only worth $6 million or something in some edge case scenario, but it's not worth zero, right? We know that it has a concrete floor to that value. The JPEG that sits on top of it, who knows what it's worth? So we're not sure what the actual value of that real estate NFT is when we marry these two different asset classes, which is actually three, which is real estate, crypto, and a JPEG. But we know what it's not worth, which is zero. And very few projects in the Web3 space right now that are selling JPEGs can look you in the eye and say, this monkey picture is not worth zero. But we are absolutely certain that our properties and our real estate NFTs are absolutely not worth zero. And we're going to find out how much the combination of these three attributes is worth. So I'm going to pause again. I'm going to check this chat to see what kind of questions we have. Donte, if you have any questions as well, please let me know.
Yeah, do you guys have any questions on anything that he's just discussed so far? I have some questions, but I want to see you guys here listening to the chat. Do you have anything that you want to add? Just to go a little bit far, this is usually like NFTs only. So like a lot of this like concepts may be a little bit, like you said, like a little bit nitty gritty or different for like some of the audience, but that's why I bring, different people to talk about different aspects and to like just, I want to like just think about it as education and just talk about different things, as we said, as a potential bear market happens, and bring people in like you that know about, these deal flows and positive cash flows and all this kind of stuff where, someone may hear that term, like it's just like we have our own terms and then we hear that and like, what is that? You know what I mean? Like, so it's cool to see, to see you in this kind of element. Do you guys have any questions? If not, I know I do. Let me see here.
Donte, before we even go into your question, you keep on mentioning this bear market, and I think that's it's really prescient. I think we are moving into a bear market to some degree, or at least a changing market. And like all markets, when markets start to underperform, there's a flight to value. Always, right? When markets are frothy, risk is on. People get, way out into the future. They're willing to buy into on a seed basis into companies that have a huge prospect to deliver returns at some point in the future. And you just keep on pushing the future out further and further because risk is on and yield is scarce today. When a bear market comes and risk goes off, the flight to value is pronounced always. People immediately start to ask, what is this worth and what is my current yield, right? And that is why this is an interesting strategy going into a bear market, right? Because we know that there's a current yield on it. We don't have to speculate as much when we have a fully leased property. We know that we're going to get that rental income from that property. We know that the current yield is going to be there. We're not pushing this off into the future, 20 years from now when ABC Corp is going to start turning a profit. And we know that the value is underwritable, right? We can just apply a cap rate, right? Which is the return that any investor would want. It's market-based on the net operating income of this property, which is the income after, or the income without all the debt, right? If you were to buy this thing for cash today, if you were to build a property for $1 million today, and the cap rate was 5%, 5% capitalization rate means you get, $50,000 for every $1 million that you spend. In a 5 cap environment, that's a $20 million asset, right? That's how this math works. And so we can back into the actual value of this. And as we move into bear markets, people interested in value are going to be more and more interested in how they could protect their downside by using the concrete floor that real estate provides.
Yeah, so, okay, great. So we had a question from Rux here. And he said, intriguing concept, just one question. To ensure the quality of the strategies moving forward for this project, wouldn't it be a healthier development to roll out the DAO NFTs to professionals more attuned to the real estate / finance / tech industries as the round play rather than a straight up public mint?
Yeah, I mean, if you think about it, real estate investment trusts exist, right? REITs exist, SL Green exists. This is a similar concept we've innovated in a few different ways, but the concept of fractionalizing ownership of real estate is not new. And those shares in real estate are provided to accredited investors first and foremost. So these are professionals who are going to be purchasing our tokens. And in some offerings, we're able to have a Reg CF offering. I should note that everything that we're talking about, these are fully regulated, right? We are selling securities, which is also unique because a lot of our competitors think that NFTs are immune to the SEC, and they don't think that the Web3 space is ever going to be regulated. And they think that this liminal space that we're living in, where people can just throw stuff out that's clearly a security and make pretend it's not, is going to go on forever. We don't think so. We don't think so at all. And we're pretty plugged into the politics surrounding this. We're having an event in Miami next week with Andrew Yang. Andrew Yang's going to be at the Balcony House in Miami during NFT and blockchain, or I'm sorry, Bitcoin week over there. And so to make sure that we are fully compliant, we roll out these properties as securities inside of our real estate NFT and leave the $5 million that we're able to for Reg CF offerings, which are crowdfunding offerings. You can be a non-accredited investor to buy into that $5 million slug, but we have $2 billion of assets in our pipeline. We're doing the smallest project we're doing right now is $12 million, right? And we'll raise, I don't know, $7-9 million for that project, somewhere in there about. Only $5 million of that is going to be Reg CF offering. So these are very small opportunities for people to get in and buy into these properties if you're not an accredited investor. And that, by the way, is why we have this, right? The balcony deed is a token that we released. We first released it for free. It had no artwork. Then we upgraded the artwork to what you see behind us, right? This is a rotating deed set to music. This is us demonstrating what the future of NFTs is going to look like, right? You're going to have an actual deed to your actual house, the actual title to your actual property, living inside an NFT. And so this beautiful piece of artwork for us is a way of saying, these are the multimedia capabilities of this technology. This is the real world application of it. Every asset in your life is going to live inside of an NFT. And in particular, that means real estate, right? So this deed got upgraded to the V2 that you see behind me, which is a whitelist for Balcony Assets Club. And those are the 10,888 people that form our investment committee and our professional network. Those are all the people who are going to be out sourcing these transactions, helping us underwrite them. There's going to be people from insurance. There's going to be people from title. There's going to be people from property management, construction, development, law, finance, all inside of that Balcony Assets Club tranche. And they will get first access to invest in any deal that we bring. Our thought is that they will likely buy almost all of it, right? So if you're a non-accredited investor and you want to participate in that $5 million crowdfund component of our capital stack, you're going to want to get the balcony deed, and you're going to want to buy the Balcony Asset Club because it may be your only chance to get a piece of these offerings, because they're going to go very quickly when we bring these to market.
Yeah, man. Did that answer your question, Rux? If you guys don't have any other questions about that, he said, yep, thanks. My question that I had about it was, so when people are thinking about like fractionalizing, again, you guys are regulated, and that's obviously the biggest issue that is looming over the market, I would say. It's like this issue with regulation. When do they decide to come down, or will they, how hard, and this kind of thing. So obviously with what you guys are doing, because you've been doing this at a very high level, I guess in the Web 2 space, the traditional space for quite some time, these won't be hurdles, or not quite as big hurdles for you guys. So that's a big thing to highlight. But another thing I want to highlight, oh, what's up, Flex? Flex is a great community member. But another thing I want to ask is, so when you think about like real estate, fractionalizing real estate and owning this, so will it be like if you buy a DAO, let's say like you buy this balcony DAO and that's worth, or you'll have a deal flow. I'm guessing like you say, you're building this $12 million property in New Jersey, and you're going to have the deal flow go to the balcony DAO holders first. And you can say like, hey, I made this, like, I don't know, 1 or 3 ETH profit, or whatever you want to say inside. Or let's say you have like $10,000. Say I made a 3 ETH profit. You could choose to like put 3 ETH, or will it be like, because it's fractional, you could choose to put like 3 ETH towards funding this property, or like how exactly will it work in that aspect, right?
Exactly. So the idea is we do have our own properties that we control, which is also unique. A lot of the people who are trying to do this are going out and trying to, convince, boomer real estate people to turn their properties into either tokens or NFTs or whatever the case may be. And that's a complicated ordeal. These are our properties that we're bringing to market first, or properties that we have direct control of. Like, for example, 390 Ocean is a property. It's a $300 million property that's being developed, that we're also going to bring to market. We're going to bring that to market as 1-for-1 condos that you can purchase with tax benefits. Separate conversation, but I'll get back to it. With the typical deal flow, let's talk about 23rd Avenue. 23rd Avenue is that 31 unit that I was just describing to you in Long Branch, New Jersey, which is this like great exploding market right now. The way it works is we would put up the real estate NFT for it. People would purchase their fractional shares of that. And that real estate NFT, that specific one, would provide you with gated access inside of a sub DAO for just that property. So that all the decisions around that property, how that asset is managed, it's all living inside of that sub DAO that we're going to create, right? We would pay you your yield on it as decided by the DAO. So for example, the DAO might decide, okay, we want to be paid every single month. We want a distribution because we could do that. Not the best idea, but if that's what the DAO wants to do, that's what the DAO does. The better idea would be to say, look, let's pay at least quarterly. We'll take all of the real estate investment income, we'll put it into stable coins, pull another 16% out on that, and then we'll have a quarterly distribution of that so that we can maintain, as much yield as possible to juice it, or twice a year. That would be ideal. And we will pay out that yield in our balcony token that we're creating. That token is being created so that you have the currency to trade in and out of these assets, and it's used to pay all of the transactions on chain, right? So if we're paying out any of our vendors, we're going to be paying them out in balcony coin. The reason why we want to do that is the token itself becomes a sink for inflation, because a small portion of every single one of those transactions flows back into the DAO, but it also gets recorded, meaning if inflation for HVAC runs 30% this year, we see that in our payments in balcony coin to that vendor, and a portion of that is reverted back into the DAO in the form of these tokens. When we pay you your yield, we pay you in our balcony coin, which you could obviously then swap for whatever you want.
Is it possible? Because I guess the only thing that people would probably have an issue with is obviously with a lot of different NFT projects, when you see every project coming out with like a different coin or something like this, it fluctuates so greatly. And also as well, they can just be subject to like issues. Like you look at, let's just say something like Cybercoins, you know what I'm saying? Like Cybercoins was worth, like their token was worth like $98, or let's say $48 or something like that. At one point now it's worth like 14. And when you look at something as I guess like the way that I look at it, and if you guys have any questions, just write it or raise your hand. But the way that I look at it is, I like that you guys are merging this kind of like technology that we're basically using to like trade monkey pictures and all this kind of stuff. And there's a much deeper pool of opportunity there when it comes to like changing the way that the world like works with this kind of technology like you guys are doing with real estate. And because the NFT market or the real estate market is such a volatile one, as you guys kind of put it on your website, I think that when you have this yield that you're paying out, like when I look at it, like it's almost like you look at it like saying, okay, cool, I have this, let's just say 3 ETH. Let's just use that example because I think like a lot of people can trade into 3 ETH. That may be a lot or a little depending on how you think. But let's just say I have this like 10K worth of ETH. And I say I want to put like 10K into like one of these, stably into like one of these projects. But then you have the ETH and then you have the project and then being paid back out in the coin, which could fluctuate like wildly. So would there be like a way that you could get paid out in USDC or like ETH or this kind of thing? Or like, how do you address some of those concerns?
Yeah, I mean, look, we're open to having those conversations. The idea behind us using our coin is manifold. Firstly, it provides us a way to understand who's eligible to make actual balcony improvement proposals, right? So if you have one of these tokens, then you can start to make proposals. If you don't have one of these tokens, you're not in our community. We frankly don't care. We're not here to kind of service those random suggestion box type drops. So it works in that capacity. It also works as currency. And the thinking is there's been for the past, I don't know, 5 years, everyone's like, well, there's store of value. And then there's like the ability to exchange. And, people argue, is Bitcoin a store of value or not? Maybe it is, maybe it isn't. Is Bitcoin a currency that's used to transact or not? Not as much as it could be, that's for sure, right? And so our thinking is our real estate NFT, which is the actual literal ownership, the title, the deed, lock, stock, and barrel, and the tenor yield of an actual piece of real estate, that is a store of value, period. You'll never convince me otherwise. I don't think anybody who's ever purchased real estate would feel the same, right? This value stays inside of that real estate NFT. But then we have these tokens that are used as currency in this ecosystem. That is how we transact, right? And so if you took your yield for your token, which is paid out to you, pegged against, the dollar at the point that we pay it out, you could swap it. You could do what you like with it if you have a certain feeling about it. Our feeling is it's going to be a proxy for a stable coin that increases in value pegged against inflation. That's our goal. We basically want an inflation-proof currency. We don't want a token inside of our ERC20 that is going to become, worth, billions of dollars a piece. That's what the real estate NFT is for. That's where the value flows. And that's been our thinking. However, if somebody has a better idea, give it to me. Like, hit me. I'll break it down. We'll analyze it, and we'll see if you guys were able to think of something smarter than us.
Yeah, sure, man. Sure. I guess you could. Someone said, Alejandro just said, and if you make the token a stable coin, doing that, you won't have to deal with the problem.
Well, it creates new problems. Then you have to make sure that you stay pegged. We're not trying to stay pegged. What we're trying to do is create a currency with our ERC20 and make sure that currency has some sort of an inflation sink in it, where it's appreciating at least at the rate of inflation. And it should do that for many reasons, right? One of them is people somewhat incorrectly think that real estate is an absolute inflation hedge. It's not in and of itself an inflation hedge, but it can be used as one. It could be more so than, other assets, I would say. But the idea is that if the rent on a property goes up because the market rips, right? So apartment A last year was $3,000 a month, but it's a free market apartment and the rents went crazy. Now it's worth $6,000 a month. When we pay you out your yield in this token, right, it's capturing some of the value inside of that transaction, right? We're pushing that inflation into this token that we're now circulating within this community. To us, that's a cleaner way to do it than to try to create a stable coin. If we were going to use a stable coin, frankly, we would just grab a stable coin, put insurance on it, which is an additional cost, right? Which makes it less valuable than a dollar in that case, because you have to pay some quantum of insurance to protect it. Or we have to run our own liquidity pool and make sure that it doesn't depeg at our own efforts, which is not what we want to do. We want to use DeFi, not build DeFi.
Yeah. Yeah. Let me say here. So let me break this down. So as I understand it, so to see if we got it right. So you have the NFT, which is the balcony deed, and that is kind of like your I guess your entrance into like the deal flow and like to be able to invest into these properties if you hold one of these deeds, right? And that is completely separate from this token, which is how you're paid with the token, right?
Correct. So the deed whitelists you for Balcony Asset Club. You get a 30% discount on Balcony Asset Club, right? We're using the deed to build our community and to reward people that are early. The people who own this deed, when they buy the Balcony Asset Club, which is a requirement to get early access to transactions and buy them, right? Because there's only going to be 10,888 Balcony Asset Club tokens, which means that if those 10,888 people just decide to buy these deals, they're never going to go to the general market, right? Just the BAC holders are going to get it. When you buy your Balcony Assets Club token, if you use this deed, if you have one of these deeds, you'll get 30% off of it, which effectively means you will not pay for the balcony deed. But what it's good for right now, for example, is it gives you access to our alpha channels. It gives you access to in real life events. Like, so for example, in Miami, we have a yacht party that if you hold a balcony deed, you can be eligible to attend. There's obviously limited space, so we can't let every single member who holds a balcony deed onto the yacht. We have a golf event at Turnberry. We have a dinner event with Andrew Yang. Andrew Yang is coming to the Balcony House to give a speech, right? And we're hoping that we can interact with Andrew and make sure that his thinking on our space and the regulation of our space is consistent with what we think is necessary. All of these types of events are made available to deed holders between now and when the Balcony Asset Club is released.
Cool, man. Does anyone have any questions about that? Also, too, it can just be in general. How do you feel like? Because like, I mean, when I was getting started, man, I know like a lot of you guys are like have businesses or you're in NFTs for like mostly financial reasons or, you know, to find a good community or in this kind of thing. And I know when I was like coming up, man, like this would definitely be a golden opportunity for me to like sit down with someone who has like done real estate or really any business at the highest level and just like see how they think. I don't know, like that's how I think. Like I really like to like deconstruct like the way people think and stuff, because I think that's really the biggest thing that separates those who do from those that won't, or those who like actually like execute from those who really don't for, you know, X amount of reasons. So we can talk about this specifically, but also, you know, also in general, just mindset questions, real estate questions. One question that I have for you as far as talking about like, you know, we have this global situation right now with, you know, with the inflation, with the war, with all kind of shit, you know, anything you want to throw in there, you know, it's just kind of crazy right now. How do you see, like, does real estate typically perform well? Like I try to look at like, I don't know, in the 2008 crisis or like maybe even like the Great Depression and shit like that. How do you feel like real estate like performs in these like versus, because we did talk about risk on assets versus risk off assets. And if you guys don't know what like a risk on asset or risk on asset would be monkey pictures, you know, people buy these things when the life is good, you know, life is good, times are good. There's no like big worries or woes in the world. People tend to buy like into more risk on assets where, as you were saying earlier, people are thinking into the future, saying like how the world can be different, all this kind of stuff. And then when the world turns, you know, we have some turmoil or something like that, people stop doing that shit. And it kind of goes to like risk off assets where people like, they want to buy gold, they want to buy land, they want to buy these kind of things because, you know, when shit is good, you know, you can think into the future, but when shit is not so good, you have to think about the immediate survival, you know what I mean? And how you see real estate performing in these potential bearish times, or like historically, you may have some more data on that than I do. But how do you feel about the whole real estate in general versus, you know, in these kind of times where they may take, you know, some of these profits from this game and possibly put it into some real estate or some kind of thing that you guys are doing?
Yeah, I mean, look, real estate has been a conservative industry forever. And, you know, I was raised in this business. I got started as a teenager in the Bronx with real estate. And the mentality of real estate people like me is, what is the net operating income? Like, that's what we want to know. How much cash does this thing throw off now? I want yield today, period. I don't even care what the asset value is. You know, so if you tell me that the building makes $1 million a year in net operating income, and like, well, we think it's worth, you know, $20 million at a 5 cap, and like, oh, interest rates up and the market changed. And now we don't think it's worth $20 million anymore. We think it's worth 20% less. It's worth $16 million now because the market sucks and you can't sell to anyone. I'm not selling. I'm not a seller. We're here to buy real estate, not sell it. I want the goddamn income. Like what I want is that not net operating income. I'm still making the same $1 million unless every single person in that building, lost their job, opened the window and jumped out it. And now we don't have any tenants, which is highly unlikely. I mean, it typically just doesn't happen in the space. So markets are changing. Disruption is real. Risks are out there. This is not financial advice. Do your own research, blah, blah, blah. But seriously, real estate is historically one of the safest, most durable investments you can make with good reason. You pay a price for that though, right? Like you pay a price for certainty in investments. So bonds are more expensive with a lower, coupon than you would get if you went on a straight all equity strategy, right? Because the bond is a promise to pay. You have a commitment for people to pay. The same thing as a lease. A lease is a promise. It's a contract to pay money, right? And for that certainty, we have lower yield in real estate, which is the part we like least about real estate. And that's where Web3 comes in. Because by using stable coins, by managing treasury and increasing yield, we can make a lower yielding asset class yield much better with the exact same risk profile. And that's the opportunity. That's the down market play, in my opinion.
Yeah, nice, man. I agree, man. That's really where I see it. Like it's, I don't know, man. It feels like, we have a question here, but really quick, it's kind of feeling like USD is turning into a shitcoin, bro. I mean, really, like the way that they're printing it and this kind of thing. So, I definitely start to think about that. Like I was even thinking, like I was talking to doing a voice chat just in the community. And I was just like, damn, bro, like, like just these stables sitting here and I know you can stake them and this kind of stuff, but you really start to think when you see like all these things happening, whether it be real estate or even buying like, I don't know how much you know about that, but like Rolexes and shit like that. Like I wouldn't actually do it, but I was just like reading into it. Like people like you can buy like a certain watch, not for wearing and stuff like that, just like as a hard asset that like generally appreciates over time. You see people do this, like they flip watches and these kind of like hard metals and stuff like that tend to hold their values. And I don't know, man. It's just something that I think about all the time, with everything going on.
I like hard assets, and that strategy is not dissimilar to ours. The difference is that, if little green men from Russia marched into a given country, what's going to be worth more the day after, a Rolex or a building? The real estate just has a much greater level of durability to it. It has a different utility. You live in it, you work in it, you operate hospitals in real estate. Like they have actual inherent value aside from their financialization.
Yep. And someone just asked here, will real estate NFTs mainly be geared towards commercial real estate, or do you see residential single family homes also entering this market?
Residential will enter this market. Our focus is on investments, right? We want to make people money and we want to build a community of killers who go out there, take down these deals in the form of real estate NFT, get yield, grow rich, share alpha amongst each other, bring us deals, and create this incredibly prosperous community. That's our goal. However, 100% individual homes are going to go on chain, and we think that they're going to use our protocol to do so, because our protocol is just going to allow that to happen seamlessly and accurately and create what is the best practices and the correct schema for all different real estate to transact globally. We don't focus on individual single family home sales, but we will allow other people to use our technology to do that themselves.
Yeah, totally.
We're also selling, by the way, those 181 condos at 390 Ocean. So those are condos that are about $1.5 million to start a piece. And when you buy that condo, you're buying the actual piece of real estate, and the NFT is your literal key to your house. You'll literally use that to get in to the building. Because it's on the beach, there'll be a beach club. You could use that for discounts on umbrella rentals and chair rentals and so forth. And it'll give you access to all the different restaurants in the area that you can get a discount on as well. And so it has this sort of like expansive utility beyond just commercial real estate, even though Balcony DAO is principally focused on commercial real estate investments.
Yeah, man. Someone said, I guess another thing too, and a great explanation. I appreciate you for breaking that down. Someone said, I guess that's the other thing too, to see real estate. I'm trying to see if there's a question in there.
Yeah, I see the question. You're absolutely right. Look, the hardest part of this project for us in terms of messaging, the question is, can you break this stuff down and actually educate people inside of the community?
Yeah.
And the answer is yes. Our goal is to teach everybody inside the community how to be a savvy investor, a critical thinker. They're going to disagree with a lot of our takes on real estate eventually. That's fine. We're not looking for, a bunch of fanboys here who are just going to go with this. We want a community of people who are knowledgeable and critical so that we can make better investments and get better yield. So to do that, yes, we are going to start breaking down all of these concepts and create essentially our own real estate investment course geared towards the Web3 investor.
Yeah, I think that would be awesome. That would be a great mix, especially the course, just to get people in. Because again, I think the value is there, but it's just a lot of times the opportunities can be again, it's just the educational, the messaging of people being able to understand it and wrap their heads around it. It's a huge thing, man. And I feel like right now, I mean, obviously we have the mania going on right now with the quick flips and stuff like that. And that's what people want. But I do think at some level, longer term, you have to think about some of these things. And again, none of this financial advice. Obviously, we're just doing this for research and just trying to educate you guys and this kind of thing. So, not hard pitching anything or anything like that, but I'm just saying I like to think about different, different ways of actually using technology in a way that is fundamentally changes the way that things work in real life. So these are things that I think about, thinking forward into the future. In the case that, monkey pictures and these kind of things go into a more bearish time, which we've kind of seen glimpses of recently. Let's see here. Does anyone?
So Donte, I want to mention something, two things quickly on that point. The first thing is, if you go into our Discord, we have a bunch of channels where there's a lot of alpha where you can learn quite a bit. So I encourage you to go do that. But the second thing is, you mentioned the quick flips, and the quick flips are incredibly important to discuss. One of the greatest values of real estate are the tax benefits that they convey, right? If you buy a piece of property and you flip it, you are not availing yourself to all of the tax benefits of real estate. This is why Donald Trump famously pays no taxes, right? It's legal. He's not a tax evader, or he may be, I have no idea. But with respect to real estate, we have tax benefits that are aimed towards real estate ownership. And in particular, depreciation is one of them. We get massive amounts of depreciation that offset income. And so when I say that we have no interest in ever selling, I don't. There's other ways that you could also monetize an asset without selling it. Here's another tax preferred way to take the value out of an asset. Let's say you have an asset that's worth 10 million bucks, right? And you want cash. Well, you could sell it for $10 million and then you're out of the deal. You never get the tax benefits again. You never get the upside in capital appreciation when the asset's worth $20 million. You never get that income again. You have to go out and replace it someplace, which is not easy to do. So instead of doing that and paying taxes on that transaction, you can borrow, call it 70% loan to value or $7 million at whatever the prevailing interest rates are from your lender. You get all of that money paid out to you, and that's not a taxable event. It's not a sale, right? Because you're putting debt on the property. And this is the refinance game. To do this, though, you have to maintain ownership of it, which is why we're not looking at this as a vehicle to flip the way a lot of people do with single family homes. We think that that's the least productive strategy for real estate. The most productive is you own an asset, you consistently invest in it, you make it better and better, you make a property that everybody in the community likes to walk past, everybody in the community would love to live in, and you continue to take the value that accrues to you out in the form of debt, which is the most tax efficient way to be paid out. And who knows, 50 years from now, you hand it to your kids. And 300 years from now, they hand it to their kids. And that's how you create intergenerational wealth.
All right. Thanks again for the explanation, man. That's a really great way to break it down. Does anyone have any other questions here? I want to be respectful of your time, man, and I appreciate you coming. Anybody on the chat want to speak on the microphone? If not, probably going to wrap it up pretty soon here. Let's see here. I think I asked all the questions that I want to ask, and we got through most of the chats as well. Did we not talk about anything that you feel like is like majorly important or something to consider, maybe even in the short term?
In terms of overall investment strategies, or in terms of real estate investments, or in terms of balcony? I mean, let me know what you guys are interested in. It doesn't all have to be about balcony. I'm happy to share some of the things that I've learned over the past quarter century working in this space.
Yep. Let's see here. I mean, I know me personally, I'm not like, is someone trying to speak, or did it just glitch out? Let me see here. Can you hear me right now?
I can.
Okay, great. Yeah, man, as I said, like, I'm not like personally heavy looking into getting into real estate. Definitely something like with the balcony DAO. I want to see what you guys do with that. As I said, I got into that one when it was like a free airdrop or something like this, and I got like I got a couple of them just because it sounded interesting, the concept. And as you grow this capital in the crypto and Web3 space, it's not really about like how much money you can make. And I was actually I was on a call with this morning with someone who had generated like a shit ton of money in the NFT space, but not in the best way. But not how much money you can make, but how much capital you can keep. I can't say it because if I say it, people will know it's too famous. But it's not about how much money you can make, but it's how much money you can keep. And you start to realize that as you start to like, bankroll profits and stuff like this. These are like longer term strategies. As we said, like real estate, property. These are the things that tend to I've stood the test of time since the beginning, really, like before we had money even. Like property has always been worth something, buildings, real life shit, and merging these things. So this is just something that I think about again, at least me personally, like it's not like I'm just going on like, oh yeah, I want to buy like all these condos and stuff like that. But when I hear it and I see that you guys are starting to develop this, especially how we are, so in the beginning of the Web3 space, as you said, like we talked like privately earlier, and you would just like look at some of the biggest companies that came out of the Web2 space. They were doing like shit in the real world, Amazon, right? Like, there was no Amazon before, and like just aggregating all of this, stocks. I mean, not stocks, but like supplies and all these kind of things, and doing them in a way where like people don't have to shop at, their local stores, and just really changing the game. And these are like the opportunities that I'm looking at now, and just like looking a little bit deeper. And I like the asset class. I like all this kind of stuff. So again, like not going crazy. I'm not like taking, 300K and like dropping it into a condo. I don't know what the hell I'm doing, but definitely just something that I'm just, starting to like, be aware of. And I like what you guys are doing. So yeah, with that said.
Yeah, I'll say two quick things about that right before we go. The first one is every one of us got involved in the Web3 space by buying something, right? And that opened up the door. Everything you learned yourself by buying something and getting involved, right? And so if you want to learn how to operate real estate, buy it, invest in it at a high level, I do recommend you buy it. And I think that this is a lower entry point to purchase. You don't have to like you said, Don, you don't have to throw 300 grand or $3 million at it to learn this business. You can throw some fractional ownership value at it and enter it. So that's the first thing. The second thing is, the Amazon model is something that I've been telling people a lot lately. Exactly right, which is that the winners of the internet, Web 1, Web 2, the companies that came out, it wasn't AOL, it wasn't some random companies that were selling software. It was Amazon selling books, real life things, and using current technology to make real life things more accessible. And I'm willing to bet that 10 years from now, 20 years from now, when we look back and say who actually won in Web3, there are going to be companies that are doing things that exist in the real world, not just the metaverse. And frankly, my goal, my hope is that we would love to be the Amazon of real estate backed NFTs 10 or 20 or 30 years from now. That would be our goal.
Yeah, definitely, man. Interesting to see like the developments, and I'll definitely be involved. Like I said, I got in like super early, part of the first 300. So definitely
nice job.
You said what?
I said nice job.
Oh
well
yeah,
done, dude.
Yeah,
it's pretty crazy.
It's that early alpha, man. Like it just kind of spreads. and it's pretty crazy. But yeah, man, if no one has any other questions, I think that's pretty much it, man. I appreciate your time. Someone said, can we get a Discord link, please? If you can.
Yeah. Hold on, sit tight. I'll get you for right now. I'll drop it right now. Copy link.
Cool, man.
There you go, guys.
All right, so you just dropped that Discord link in the chat. And yep. Yeah, sure. Sorry, guys. I appreciate you for coming on the call today. Obviously, John, appreciate you and appreciate your time. And looking forward, man. Looking forward. It's really exciting and looking forward to seeing what you build and how it turns out. So I'll be here.
Yeah, man. Million thanks for having us. Appreciate it. Thank you guys all for listening to all this. Anybody has any questions ever, reach out to me, DM me directly. We can have calls. Like, I'm pretty accessible. I just want to see this community grow and help people get their heads around it. So again, thank you so much for having me on so I can talk a little bit about Balcony DAO. Appreciate it, Donte.
Okay, no worries. All right, take care, everybody.